My name's Brad Laddusaw, president of the California Mortgage Association. We're here in Indian Wells, California for CMA's spring conference. I am here with Brad Rogerson with Hanson Bridgett. Brad, thanks for agreeing to jump in the hot seat with me. I know
Of course.
I know I'm kind of an intimidating person.
Oh yes,
so
very much so.
Thanks for sitting down with me. Would you mind taking a few seconds, introducing yourself, your law firm, your specialty?
Yeah, I'm Brad Rogerson. I am a business and real estate attorney, transactional attorney, based out of San Francisco at the law firm of Hanson Bridgett. We are an all-California law firm, around 200 attorneys, I think, right now, with offices in both Southern and Northern California, Sacramento, San Francisco, LA, and I think we're coming soon to San Diego. We practice across a huge range of practice areas, all business-based. So kind of anything from soup to nuts that you need to have done for your business, from employment to corporate to litigation, we have attorneys that do it all. I myself am a business and real estate attorney from a broad view, but with a specific focus, or partially a specific focus on
It's a moving target at times.
Yeah, private money and private money lending. I've been doing it for 20 years, I think, and it's always been a part of my practice. And I tend to focus a little more on the securities side. I am the securities counsel to CMA. And so I do a lot of forming funds, doing different types of securities offerings for people in the private lending industry, to help them raise money and fund their loans.
I'm going to crack a joke here. It's actually not a joke. So we've known each other almost 10 years now. Oh, yeah. And in the beginning, you called me the other Brad.
That's true.
But what's your first name? Is it actually Brad?
No, it's Kent.
Kent.
Yeah.
Okay, I just want to get that out there. So it's, but
no one calls me Kent though. But yes, if you want to call me Kent,
well,
so that we do not.
If you got a pissed off client,
yes.
It's like if people ask, do you want to be called Brad or Bradley? I'm like, it depends on if you're pissed off at me or not. And that's normally the deciding factor.
Yes, if anyone that calls and asks for Kent, I know I either owe them money or they're trying to sell me something.
So we're going to go back a little bit here. Did you always know you wanted to be an attorney?
No. By about college, yes. I think I always knew I wanted to go to law school.
Okay.
Law school, and I never thought I was going to become an attorney. I thought I was kind of using law school to get into business, was my theory at the time. And then when I came out of law school and had law school loans to pay, I decided I had to just get a job wherever I can get it to pay my law school loans back, and that was as an attorney. I started as a litigator, doing commercial litigation for a few years. It was a great job for a young attorney because what I was doing was the client, we were basically enforcing leases and loan documents. And it was great because our client was cheap and they wanted the young people to do a lot of the work, meaning I was, had a caseload of about 30, 40 cases at a time. I was in court all the time. But the law itself was not very intricate, It's enforcing a lease or a loan. Did you sign this document? Yes. Did you pay? No. We win. But it was a lot of negotiating settlements, and so I always knew I wanted to end up as a business attorney and a transactional attorney. So it was a good start, but I pretty quickly moved to another firm where I started doing what I do now.
And you said you've been with Hanson Bridgett for how long now?
15 years.
15 years. And then when you moved over to your current law firm, were you already kind of well-versed in your specialty drilled down to securities, or how did you get into your specialty?
So at my prior firm, where I kind of started in CMA with my prior firm, and we were doing these funds, and we did a lot of them. We were at one point though kind of the only firm that was really doing them in this area, and 2008 hit, and there was a lot of fallout from 2008 for these funds, and there were lawsuits, and it was, long story short, the partners at that law firm started to think they didn't want to be doing securities work because of the potential liabilities. Mm-hmm. They were also all very close to getting retired, and they're like, I don't want to have to worry about this when I'm on a beach in Brazil. And I said, unless you're taking me to Brazil with you, I still have to work, and I'm going to go do this somewhere else. I went over to Hanson Bridgett, told them what I was doing, and they said, bring it all over. We want to do it all. And so it was really nice to have that support.
I joke around from time to time. I say fund managers have been kind of reproducing like rabbits over the last couple of years. Raising the capital hasn't been the challenge. It's been quality of deal. For your clients, what have you seen over the last, let's call it over the last 10 years? Let's go back 10 years on structuring the fund then versus going securities route and structuring it now. Is it kind of the same, or are there different challenges?
No, there was a huge difference right after the Great Recession, right? So we learned a lot of lessons after the Great Recession about, people weren't thinking, they wanted it to be very liquid, and they wanted to be able to tell their investors, yes, you can get your money out whenever you need to. And we, as the lawyers, always said you need to build in these protections just in case there's a run on the bank. 2008, 2009 hits, and there's runs on the bank.
and again in beginning in 23?
Yeah, and again in 23. And so the coming out of 2008, 2009, we again went back to making sure that everyone, and never stopped. So we saved a lot of our clients real issues because they had these restrictions on withdrawals. But we also learned that it choked a lot of their lending off, right? So they're spending all their money paying these withdrawals. They need to keep some money, to make new loans. Because one of the things that happened after the Great Recession was there were great loans because all the banks and everyone had stopped lending, so you could almost do paper loans out of a hard money fund. So we restructured there to make sure that there were not. A lot of people just have this. You can cut it off and terminate your withdrawals. We have we can withdraw and we can keep an X amount or an X percentage of our cash flow to make new loans at the same time. So you the investor, have some sense of, look, we're going to still try to get you your money, but we are also protecting the investors in the fund that aren't trying to get out, and so we can keep the fund going. That's kind of the structural thing that I think of most different. The other thing is kind of they used to all be the manager would take its asset management fee and its servicing fee and its points and pass through all of the profits and upside to the investors. Later on, the quote unquote a hedge fund model, was used where they got into prefs and the splits.
Like the hurdle rates and all of that.
Yeah, we've always done that, with real estate funds and real estate syndications. That was always kind of how you would structure those. It got more into the mortgage fund probably about 10 years ago, right around there. And so now there's a lot more flexibility, and you could slice and dice it any way you want. And I would say that it tends to follow a couple different formulas, but there are some out there that have some really interesting aspects, like floating rates and things like that.
So we're going to dive in. We're going to do a little tangent deep dive. This was not on the pre-questions I shot your way, so surprise, surprise. The REIT model strategy, is that something some of your clients have been asking you more about over the past few years? What's the benefit for that? Do you recommend it, or is it not for everyone? Or what's kind of
the big benefit? You could always people used to always come in and say, "I want to do a REIT," and then you talk to them and explain to them what a REIT really is
and what they have to actually do.
Yeah, and half the time they were just trying to say, "I want to do a mortgage fund," and just calling it a REIT. A REIT is a tax election, so that is just how you were taxed, and for the most part, most of these type of funds didn't need to be a REIT because there was no benefit. The primary benefit of a REIT is when you are formed as a corporation, it allows you to avoid the entity level tax, right? So if you're a C Corp and if you're raising money from a lot of different things, that you can't be an S Corp, you would get hit with the tax at the entity level, and then your investors would get taxed again. What a REIT is, if you can qualify, it allows you to write off against your taxes all of your distributions that you make, so all of the dividends that you pay out of your REIT. Most people didn't need that because if you do it as an LLC or a partnership, they already had pass-through taxation. They didn't have the entity-level taxation anyway, so it wasn't something that anyone ever needed, and it definitely wasn't worth the jumping through the hoops that you have to do to qualify as a REIT. The Tax Cuts and Jobs Act, in Trump's first term, gave a significant benefit to payment of REIT dividends over pass-throughs, and that is it's qualified business income, which made your investors eligible to a 20% write-off on their taxes. So that's when it finally had, something that was beneficial.
Had some teeth.
Yeah,
on benefits.
and people saying, hey, I want to do this. So you got people converting their existing funds to REITs and then forming their new funds, to be compliant as REITs. It kind of waned here as we got close to this election because the Tax Cuts and Jobs Act provisions in this regard, are supposed to sunset.
When were they originally supposed to sunset?
The end of this year.
End of this year?
I think, yeah. And so the question was, if Trump didn't win, are those going to get extended? And I always told my clients, the thing is not so, if the new administration had to affirmatively terminate it, I would say don't worry about it because, politicians aren't good about affirmatively getting anything done. But the fact that they were just going to expire, caused some concern because if they can't get it together to extend either administration, that's an issue. So we're now waiting for that. I think it's a good bet that they're going to extend them now. So that benefit is going to go forward for some time,
And your clients, when do you recommend a lender or an investor that needs your services reach out to you? Are they typically reaching out to you, hey, I got this idea, is this something that I can do? Or do they normally reach out to you after they F something up and say, hey, how do we clean it up? Or a little bit of both?
They do both. Okay. I prefer the former.
Yeah.
There's two things. I also do regulatory stuff. So the regulatory stuff is usually, what do I do? The regulator's either knocking at my door or they just sent me a letter saying I did something wrong. But the fund side, they're usually saying, hey, I want to start a fund, or hey, I need to raise money from people. Can I do this? And how do I do this? And some of my clients just are real estate guys, so I want to syndicate a loan or I want to raise money for that. How do I do that? That usually comes in at the right time, which is the beginning, before they've messed things up. The regulatory stuff, like I say, sometimes they don't think about it until the regulator is pounding on them, and that's when we have to kind of fix. A lot of it's just explaining to the regulators too that, look, hey, this wasn't intentional, or whatever the case may be.
To go down that, not to get this topic too depressing going the regulator route, but most of your clients, who do they report to? Are they DRE or CFL? Or
it's about half and half.
Okay.
Most of them have both licenses. Some might not even use their CFL license. Some might not use their DRE much. But as the type of arranging that you do, it can dictate what kind of license you have to have. So a lot of them have both to have the kind of flexibility they need.
So your clients that have the two licenses, how do you as their attorney recommend they keep their files kind of documented? Because the last thing you'd want to say, hey, I funded this under a CFL, but then you got the DRE comes in and say, hey, no, you're doing this under a broker's license. How do they keep?
Yeah, well, in the old days, we would say very clearly, I want this to be in that, I want all of your files over there and all your files over there. So if one regulator comes in, you point them that way, and one points them, you point them that way. Obviously, now that we don't really have file cabinets, but it's the same thing, keeping them very clearly separate so that when someone comes calling and wants to see them, you can say, these are the ones that are under your purview. Those are DRE. You don't need to look at those.
Yeah, and then remind me, the governing body for, or all the CFL holders go to, that is?
Well, now it's the DFPI. It's been through about 5 changes. It was the
Department
of Corporations, the Department of Business Oversight. I think I'm even missing one in there. And then the Department of Financial Protection and Innovation.
I know historically, we heard that if you're operating under a DRE broker's license, those audits were pretty grueling and tough to navigate through. It was not as grueling if you carried a CFL. Have they kind of evened the playing field a little bit on how they look at things, or is it still one preferred over the other, or are they both potentially a challenge?
On the CFL side, I would say it's still a challenge. I think the DFPI is still a little bit better. A little bit less grueling, because that license is really all based on protecting the borrowers, because it doesn't contemplate the idea that you're arranging loans to individual investors that need protections. Whereas the DRE law, that's all. A lot of what the exemptions that a lot of you guys use are investor protections as well as borrower protections. So you have both sides, and they are pretty rigorous. And it comes down to the regulator that you get. Some are great, some don't know things as well, and you kind of have to explain things to them. But I'd say in that area. Now, the DFPI on the security side, if you had a permit or something, that can be really tough, because I think they can be challenging. Let's just put it that way.
You touched on it briefly, exemptions that lenders. So I operate under a DRE broker's license,
Right.
raise private investor capital for the loans. Would you
Yep.
mind touching on the couple exemptions that we rely on for securities exemptions?
Well, if you're doing direct trust deed investments, the big one is the multi-lender exemption, and that is, a lot of people call it the 10 or less investor exemption, because that's the big limitation that everyone has. You can raise money from 10 or less investors, fractionalizing the loan. But there's also a lot of, as a lot of other requirements to meet that, and those are LTV limitations. Again, these are things that were put in that back in the day, and that's been an exemption for longer than I've been doing this. And it's this idea that, hey, we'll let you have this exemption, but we're setting these standards so that the risks of the securities that you're offering are mitigated to some degree. And that's why, if it's a construction loan, they've got another layer of things that they're limiting, because they always have viewed construction lending as far riskier. And so, and then at the same time, it has all of and we still have to protect the borrower, so we have all of the borrower disclosure side as well. There was at one point kind of two rules for a loan that was made to one investor and the loan that was actually fractionalized. And then, right again, after the Great Recession, and they wanted to, more protection, in theory, their response was just to basically dump some of the protections that were fractionalized protections into just general law. So now it's kind of across the board if you have one investor or two or 10.
No, that's right. I've seen some lenders and investors reach out, ask me questions, and they're like, well, I'm doing XYZ LTV. And I'm like, you may want to talk to your attorney, because the DRE, if you're doing under a broker's license and using private investors, there are those parameters, and they have it buried into the LPDS. They have a mortgage broker compliance manual. There are certain appraisals that you need to get if you're going to have a fund control component. You need to have a third party potentially over X amount, and it's not as simple as, hey, I got an active investor looking to take down a deal, and then I got money that is willing, and I'm going to bridge it together. It's changed a lot.
Yeah, it's a lot of work.
Well, so they pay the big bucks.
Well, and that's why people like the funds, is because the funds, yes, you're still arranging loans, but a lot of times you're arranging loans on behalf of your own fund, which makes it a lot easier. Now you have another layer, though. You're now raising money from your investors, so you have the securities law, provisions you have to comply with, the raising funds and selling securities, as well as the management of people's money. I mean, you don't want to be taking in a bunch of money when you don't have loans, because it's going to sit there and not earn any interest for them.
Cash drag on that, and we're not going to get into ERISA law and all that, but there's also additional things to keep an eye on if you're going self-directed RA or IRA money going into the fund, right? And that's where the ERISA kind of comes into play.
Yeah. And that's what makes this area fun. I've always there are so many pieces, and why there's not a ton of attorneys in the world that really get it, because there's so many pieces. There's the licensing, there's the securities, there's the ERISA. It's a lot of pieces that have to be put together and packaged well and understood both by the client and the investors. I mean, even if it's not understood, it has to be disclosed.
And that's one thing I took away from being an auditor. If it's not documented, it's not done. And so you got to get the shit in writing, got to document it, make sure it's in the file. Can come back to bite you, depending on how you're writing it up, but it should be there.
You'd be surprised how many investors that when they invest are the most sophisticated and well-off people that become the little old ladies that know nothing about lending when something goes wrong, and then you're taking their last dollar. You want to have it documented.
No, absolutely. So that goes down to next question I have for you. I mean, over the last few years, what is the biggest error or misstep you've had a client make, and how was that resolved?
Well, I would say the biggest quagmire is I had one client that
That's a better word.
Bought a golf course, and it was a tough. It went bad. The appraiser was fraudulent and did a fraudulent appraisal. But the owner, and I've seen this happen with a couple people, some are my clients, are not, went on to online and started bitching and moaning and making all these claims. That is something that you should never do, antagonizing either your investors that are coming after you or regulators, and blew it up. It made it last so much longer than it needed to last,
So your client went online.
Yes.
So you don't recommend?
I do not recommend that.
Don't recommend being a keyboard warrior and getting online and just kind of airing it out?
Keep it quiet, get it resolved, and move along.
We touched on the fund, securities, and your specialty. Do you still litigate at all, or you have a team that helps?
No, I have my litigators. I have litigators. Like if we had to do like SEC or litigation, I have a guy. I do the regulatory stuff. So if there's regulatory hearings that need to be done, usually with the California stuff, I will do. But I don't like to, full blown litigate.
Do you miss your litigation days? Litigating days?
No. I like to shake hands at the end of a deal,
Shaking hands and
we're
kissing
all
babies,
making money. Hey, let's go home and have fun.
Go to sleep and wake up and do it again
Yeah,
tomorrow.
exactly. It's much nicer.
So we're going to do a complete pivot here, 180. Who is Brad Rogerson? What do you do for fun? What makes you tick?
Who is Brad Rogerson? For fun, well, I like to hang out with my beautiful wife and my wonderful daughter. I play guitar, old school heavy metal, 80s metal is my favorite. I'm now living in Washington a lot of the time.
I was going to say, you recently, or it's not so recent anymore,
yes.
but you're up in, where in Washington yet?
We're at the Gig Harbor area. And I battle blackberry bushes. That's what I do most of the time. Get out there and I'm going to pull everyone out of my property by the end of this year.
Do you enjoy it up there, or do you miss it?
Yeah, I love it.
When you were in California, were you Bay Area, or where were you?
Yeah, we were Marin, in San Francisco most of my life, and then Marin. And I'm still down there a bit. I pop down, and I consider myself working out of the San Francisco office at this point. And we love it up there. I mean, it's our first winter, so it's not so much. And the rain isn't the problem. It's the dark. It stays darker much later and
there's
goes
no
dark
light
much
pollution up
earlier.
there.
So that was the one thing to get used to. It's only like a half hour on each end, but it's just that key half hour. Instead of it being 5, it's like 4:30 or 4:15, and
it's dark.
Yeah, and it's dark. And you're waking up at 8 o'clock in the morning, and it's dark. So that is the one we're dealing with, but. We're coming to spring, and that's the best time.
So I didn't know you played guitar. You said heavy metal. Did you grow up playing guitar, or is this
I
college
started,
days picked it up?
I started, I think, when I was a senior in high school, and then kind of tooled on it for most of my life, and never, But I hadn't started really I played with some people and in a band, not in a band.
I was going to ask, are you in a band? I got to dig into the archives and find some photos.
We have the only band that's only been a band is the thing we do at Halloween. We would, out of my friend's garage over COVID, we had our little
play for the neighborhood.
We'd play like our 4-song set at the Halloween party. So that was fun. That was really fun.
One last question for you. Money's not an issue. Bucket list trip. Where are you, your wife, and your daughter going to? Again, I like throwing these random questions out there.
Well, so I'm deciding. If my wife's deciding.
This is you.
If my wife's deciding we're going somewhere warm, but if it was me, I'd be probably French Alps skiing would be kind of mine. I've always wanted to do the ski trip in the French Alps.
And then would your daughter sign off on that trip?
No, she'd also want to go somewhere warm. They'd be all about the Bahamas or somewhere.
So it sounds like you'd be going skiing by yourself, and then you meet up with them in the Bahamas afterwards on the way back.
Yeah. Okay. Money's no object. Sure. Yeah.
Yeah. We're gonna.
I'll fly, meet you guys on the way back, and yeah, that's probably right.
And then, Brad, how have you been involved with CMA? You've been an integral part.
I was trying to figure this out earlier, but I'm going to say 20 years because the very first.
Because that was pre-merger, right, or right after?
No, it was right after the merger. Okay. And the very first time as an attorney I ever did, any sort of speaking engagement was here when they added the construction limitations to the multi-lender exemption. That was the first speech I gave to go over to people, and nobody liked me because it was a horrible rule. And I had to tell everybody
You're like, it
that,
is what it
hey,
is.
you know those construction loans you were doing?
Yeah.
Sorry.
Yeah, shit's changing quick.
Yeah. So that was like 20 years ago.
And then how have you seen the association change over that 20 years?
It's been a great association. It's grown. Well, it's funny, it kind of ebbs and flows with the industry itself. But it's remained solid, which is what I like. You know, it is it focuses on keeping people educated, and you know they understand that. Look, if there's bad actors in the industry, which there always are, it hurts all of us, right? So if we can provide, you know, a place where people can understand how to do this right, it helps all of us. And they have kind of kept to that credo from the beginning. And I think, you know, I give, you know, people a break on my rate if they're CMA members because I know that they're being, you know, they're actively trying to be a good lender and to comply, right? And because if you're not trying to, if you're a weasel and you're trying to, you know, defraud people or whatever the case may be, I don't want you as my client. Yeah. And it makes my job easier if I know, you know, if someone is, you know, if someone that is wanting to do it right, and that's, you know, that's what I'm supposed to be helping them with. And if I know that they're getting that education, not, you know, and some of the things, you know, I do some of the stuff for them, but a lot of it is the nuts and bolts that they learn here. It makes me feel better, and it hasn't served me wrong yet.
And I tend to say I joined CMA almost 10 years ago, not to necessarily quadruple my business, but increase the chances of still being in business a decade down the road. And it's attorneys such as yourself that are invaluable, I think, to CMA, your support over the years, and just your willingness to share the good, the bad, and the ugly at the conferences.
Unfortunately.
Well, but I think it's so important.
We try to get some good in there sometimes.
And the good normally comes up after, you know, a couple glasses of wine at the bar in the evening. But Brad, I want to thank you for all your support over the years, agreeing to sit down with me, talk a little shop on camera.
It's not that bad sitting next to you.
I told you it wasn't going to be that bad, but again, thank you for everything, Brad.
Of course.
Thanks.